Hello, welcome back. I am here today. It's a very rainy day, but I am ready to chit chat with you, explain some more fundamentals, and get your knowledge up of how your books and your business can thrive. So we have talked about there are three different financial statements within each business that are really important to review. These are your profit and loss, your balance sheet, and then your cash flow statement. And last time we chatted, we were talking about your profit and loss, which most of the time, most businesses live the majority of their life in here. But the balance sheet is just as important as the profit and loss. And I think that sometimes it's hard to conceptualize what actually is happening on the balance sheet. So we are going to talk about that today. On a high level, accounting is really based off of a what's called a double entry. And so every transaction that happens within your business has a credit side and a debit side. So anytime you put money in or take money out, you put most of the time it lands on your profit and loss, one of the sides, but then the other side typically lands on your balance sheet. So what actually is a balance sheet and what does it hold? Let's find out. Of course, I did not select the right thing, so hold on a second. Let's see. Okay, there we go. So, in the big picture, the balance sheet is going to be a snapshot in time of what your business owns, owes, and is held by owners. So, when you're looking at profit and loss, you kind of take uh, a time frame in which you can look at something. So within a month, within a year, within a quarter, within 3 years, what all accumulates within the profit and loss. The balance sheet works a little different. It's just one moment in time. So when we look at the balance sheet, a lot of times when us accountants say, hey, we need to reconcile your books, that's what we're really talking about is reconciling on the balance sheet in a moment in time what is stated at your bank balance. So a lot of times when you get bank statements, it ends at the end of the month, let's say the 30th. So if you looked on September 30th and looked at your bank balance, that number at the end of the day should also match what's on your balance sheet. Sometimes it's a little different with like credit cards and you can generalize, get there some with some math, but just that one moment in time, what is the overall aspect of the financial position of the business? The formula for it is actually going to be assets equals liability plus equity, and we will dive in and what actually is an asset, what's a liability, and what do those terms actually mean. And like I had mentioned, this actually, looking at the balance sheet, shows the financial stability of where oh, sorry, stable. How financially stable your business is. Do you have a lot of cash on hand? Do you owe people a lot of money? And what does that look like? All right, let's dive into some definitions. Assets. An asset is basically anything of value that the business owns and can use for economic growth. So we have two different categories typically listed within your assets, and this is going to be your current assets, which are going to be anything that can turn into cash within a year. So this is typically your bank balance, any accounts receivable, your inventory, things that have a high turnover rate. And then your non-current assets, these are going to be things that are over a year. So if you have loans out to other businesses that you own and you don't expect to receive payment within that year, you're taking, payments over time and expect maybe in 4 years for it to be paid off. This also is hard property, equipment, items that you hold that it would take longer to sell these items off or you plan to retain it. That truck that you purchased, this you're going to hold on for 5 years. That's also going to be listed here. So basically, the total of assets show what the company owns and uses to run the business. For liabilities, this is actually what a liability is debts or obligations owed to other people or businesses or state or federal agencies, but all the money that you don't necessarily pay right away, but over time. Again, same thing with the current assets. You have current liabilities. These are items that need to be paid within a year's time. So a lot of times you're going to have your accounts payable. So maybe you guys have net 30 or net 60 set up. If that is true, then you'll have your accounts payable, credit cards, lines of credit, or wages owed to employees if you're on an accrual basis. And then your non-current liabilities, those are going to be items that are over a year. So think of mortgages if you took an IEDL loan, lease obligations, things that perhaps you have 5 or 7 years. Let's say you have that truck, you can put that as an asset, but perhaps you actually took a car loan or a truck loan for it. That's going to be on your non-current liabilities. And again, same as the reconciliation for your assets, we still ask for those same reports and are tying actual numbers and ensuring that those dates tie back to a specific line item on your balance sheet. So liabilities basically are showing what the company owes and must pay in the future. So that leaves your equity. Equity is a little bit more ambiguous. It's more of just math. Uh, a assets minus liabilities equals equity. But what equity is basically any owner contributions, any owner draws over time, what has accumulated for the business's net profit, whether that is a loss or a profit. And just the accumulation over time. So equity grows when your business earns profits or when owners invest more money into the business. This is an example of what a balance sheet may look like. So at the top, you see your assets, and this is where your current assets lie. You have 3 different bank accounts here, and then you have this company doesn't have any accounts receivable, but if they did have some accounts receivable, we would see that there. They do have some fixed assets. These fixed assets are going to be the non-current assets. So all of these items together equal the total assets. So you have $72,380.66 on September 30th is what the company holds and owns, not owes. And then you have on the bottom side, you have your liabilities and equity. So your liabilities, again, you have your current assets, current liabilities. So that's going to be your accounts payable, credit cards, and then other items. So this company has sales tax that they've accumulated over time and they owe on a monthly basis, which isn't due until net 30. So these have accumulated onto this balance sheet showing what is still owed. And then it has some minor payroll wages of tax also that are there. If they had any long-term liabilities, so let's say that vehicle was up on the top for 3,600. Let's say they ended up having a loan, you would see that down here at the long-term liabilities. And so that gets one area, and then you have all these equity parts. And the equity is the shareholder equity is going to be any insertion of money. You have your distribution. So if they have if they're taking money out for any cash related things for themselves or an accidental personal expense on the business, we'll throw it in this bucket. Retained earnings, this is going to be the accumulation over time of what that net income is, whether it is a loss or a profit. And then the net income that is on there, that is the current year at 9/30 of what the net income is for that year. So all of these things together, these current liabilities, long-term equity, those liabilities and equity equal the same as the assets. So 72,380 and 66. So yeah, that's just a little nutshell of what the balance sheet what the balance sheet is. I hope that this was really useful for you and that maybe it has tied in some items a little bit more clear for you. It does take time and repeating and meeting with your accountant to understand over time how everything works and ties together. But each statement really flows into one another to really tell the full picture of what is happening within your business. And that balance sheet is really helpful for when you're getting loans, when you're filing your taxes, and the accuracy of it, even though you may only have one bank account and one loan, knowing these things shows how healthy your business really is. So, reviewing these and understanding them is really important. If you're still unknown of what the heck is going on within your things and you want a deeper dive of how you can streamline your business financials and just want an expert eye on it, I would encourage you to reach out. We have a cash flow and profit analysis call that is free, and we would love for you to book a call. So, yeah, please reach out, and I look forward to chatting with you next week. Have a great week.